Hey, finance friends, welcome back to TalkTickers.
TalkTickers, where we...
crack open earnings report.
Yeah, crack open the vault of earnings reports and,
And try to make sense of the loot inside.
try to make sense of what's inside, exactly.
Right.
Today's treasure map?
Treasure map.
Blackstone.
Blackstone's third quarter 2024 numbers.
Yes, their latest earnings.
Yeah.
So, time to break out.
Oh, the jargon buster.
Yes, the jargon buster. Always a favorite.
Always.
First up, AUM.
A.
AUM.
What does it stand for? Do you even remember?
Assets under management.
Yeah, got it.
You make it sound like it's so hard.
Well, I mean, it is complicated stuff.
It's just, it's how much, it's the size of the pie that Blackstone gets to play with.
Yeah, the size of their financial empire, basically.
Yeah, exactly.
And trust me, this isn't,
This is not your piggy bank.
No, not at all.
This is a cool 1.1 trillion.
Trillion with a T.
Trillion with a T. That's right. A 10% jump year over year.
Wow, investors are really lining up.
Lining up to work with Blackstone. That's right.
Yeah, I mean, who can resist the allure of those, what is it again?
FRE.
FRE, yeah.
Fee-related earnings.
The money Blackstone makes simply for being Blackstone.
I mean, essentially, yeah.
I mean, I wouldn't complain.
No, it's the recurring fees that they collect on those assets, no matter how well, the investments do.
Regardless of performance.
Yeah.
See, beat a financial titan.
It's good work if you can get it.
Exactly. Speaking of perks.
Yeah, tell me more.
What about those distributable earnings?
Oh, the DE?
DE, yeah. How much of the Blackstone booty is, going out to investors this quarter?
Hold on to your hats because we're talking 1.3 billion in DE.
Billion?
Or $1.11 per share.
Okay, I have to admit, those are some impressive numbers.
They're big numbers.
But let's be real.
Let's be real.
Numbers can be deceiving.
Right. Well, to a certain extent.
Like one of those deepfake videos, It's convincing at first, and then you're like, wait a minute.
Right.
This is all smoke and mirrors.
That might be a bit dramatic.
Okay.
But I think the point is we need to look beyond just the headline figures, right?
Right.
What's driving this?
Yeah, exactly.
Can they keep this up?
Yeah. What's the sustainability look like?
That's what we need to figure out.
Excellent question. And what better way to find out
I don't know. You tell me.
than to consult the CEO decoder ring?
Oh, here we go.
Let's hear what Schwartzman himself had to say about the quarter.
All right, let's do it. Straight from the captain's log.
Or
the company's press release.
Yeah, there you go.
Blackstone reported strong third-quarter results highlighted by broad-based acceleration across our business.
Right.
Blackstone is exceptionally well-positioned as the reference firm in the alternatives industry.
Okay, so let's translate that from Schwartzman speak into something resembling...
Plain English.
Yeah. Strong results, sure. I mean, we saw the numbers. Broad-based acceleration. I think that just means they're firing on all cylinders.
Yeah, things are going well.
Yeah.
They're doing great.
But reference firm.
Reference firm.
What does that even mean?
It's like the cool kids table.
Okay.
In the alternative investment cafeteria.
Okay, so they're the gold standard.
They're the ones to beat, yeah.
All right, Schwartzman, you can brag a little. You've earned it.
I mean, their track record is pretty good.
It's not bad.
They've had a good run.
Yeah, but let's move beyond the victory lab. And
yeah, let's get into the weeds.
Let's talk about the actual loot.
Okay.
What kind of treasures did these guys unearth this quarter?
Well, I mean, they're not afraid to spend money, right?
Right.
So $54 billion invested this quarter.
Hold on.
Which is huge.
$54 billion.
It's their highest investment activity in over 2 years.
That's more than some small countries' GDPs.
It's a lot of money, Riley.
Where is it all going?
It's going everywhere. I mean, they're very diversified. But a few key themes, I think.
Okay.
Doubling down on real estate.
Okay.
Logistics, life sciences.
So like warehouses for Amazon.
Yeah, exactly.
Like
and labs for, the next big cure.
Yeah, okay.
Kind of thing.
So online shopping and immortality. Got it.
And infrastructure, a lot of infrastructure.
Infrastructure.
Renewable energy, digital connectivity.
So while all the tech companies are fighting over the metaverse, Blackstone's like, we're just going to build the actual infrastructure that powers it.
Exactly. The picks and shovels.
They're playing the long game.
The picks and shovels of the digital economy.
I like it.
It's a good place to be, frankly. There's this whole trend that we're seeing this earnings season.
Yeah.
Like a little bit less exuberance about tech.
Yeah.
And maybe a little bit back to fundamentals.
Yeah.
A little bit more focus on...
bricks and mortar.
Yeah, the real assets, the things that actually power the economy.
Less investing in companies that are going to reinvent the taxi.
Right.
More companies that are going to just build more roads.
Right. More companies that are going to just build more roads.
That's right, yeah. Build roads and bridges.
That makes sense.
I think part of that's driven by the fact that, I mean, interest rates are going up.
Yeah.
There's concern about, valuations in tech.
Oh, yeah, the bubble.
And the robots are coming for us all.
That's right, the robots.
But maybe it's time to dial it back a little bit.
So do you think Blackstone is using AI to pick its investments?
Do you think they have like a room full of AI oracles?
Maybe. I don't know. It's possible.
I'm sure their methods are sophisticated, but I don't know if they're quite that,
Futuristic.
yeah.
Okay, so maybe not magic, but definitely some,
Some very smart people,
financial wizardry going on.
a lot of spreadsheets.
Okay, let's get into their specific segments.
Okay, which one you want to start with?
Let's start with real estate, the granddaddy of them all.
All right, real estate, their bread and butter.
$325.1 billion in total AUM for real estate this quarter.
Wait, but wasn't everyone saying that commercial real estate was
Do you think
dead?
office space is over?
Yeah, everyone's working from home now.
That's right.
So what's going on?
Okay, so there are definitely headwinds in certain segments of the market. I don't think anyone would dispute that.
Okay.
But Blackstone, they've been pivoting
Okay.
away from, your traditional office space and towards those high growth areas we talked about, logistics, rental housing, life sciences.
So they're not just buying up like empty office parks?
No, they're not just, hoping that people are going to come back to the office.
Okay, get to
They're
it.
being a little bit more strategic about it.
Okay, what about private equity? Are they still
Gobbling up companies.
yeah, basically.
They are not shy.
Okay.
Private equity also saw impressive growth, AUM increasing by 12% to $344.7 billion.
That's a lot of billions.
It's a lot of billions. They see the opportunity, and they're putting that capital to work.
Okay, but private equity, that's pretty broad. What kind of stuff are they actually buying?
It's a little vague.
It's very vague.
So they're into energy transition, healthcare, enterprise software.
Okay.
They're thinking about the future.
The future of everything.
That's right.
Okay, so they're betting on electric cars and personalized gene therapy.
And that we're all going to be living in the cloud.
And living in the cloud, yeah.
That's right. It's a bold strategy.
Well, they're Blackstone.
Yeah, exactly. And we can't forget about their tactical opportunities segment.
Oh, yes, their special ops team.
Right, like the financial equivalent of, Mission Impossible.
Yeah.
They put together a team and they
Yeah.
go after those, time-sensitive deals.
Yeah, except instead of stealing priceless artifacts, they're buying up,
Distressed assets.
yeah, distressed assets,
That's
things like
crazy.
that. $2.5 billion invested in that segment this quarter.
Where did they even find $2.5 billion? Didn't they just spend $54 billion? Riley, they have a lot of money.
Okay, that's fair.
Don't worry about Blackstone's, checkbook.
All right.
They're doing just fine.
Okay, fine. But let's move on to credit and insurance.
Okay.
To be honest, this is where I start tuning out.
It's not the most exciting part.
It's a little dry.
Yeah, so basically this segment is all about financing and managing risk in ways that, your average bank won't
Okay.
or can't.
So they're like the cool cousin of the banking world?
I don't know if I'd call them cool.
Okay, the edgy cousin.
Maybe a little bit. They're a little bit more willing to,
Take risks.
to think outside the box.
Okay.
They're capitalizing on this growing demand for private credit.
Private credit is at like,
It's like loans, but not from a bank, from, private investors, institutions.
okay, and this is a good thing because,
Well, it's seen as a little less volatile,
okay,
potentially more lucrative, but of course, more risk.
higher risk, higher reward.
That's the name of the game.
And Blackstone's playing it?
They are playing it, yeah. $354.7 billion in AUM for credit and insurance.
Wow, that's a big number.
It's a big number, 22% jump year over year.
Okay, so this is the real growth engine.
It's a big part of their business, for sure.
Okay, I'm convinced. Private credit, got it.
Okay.
Multi-asset investing.
Okay, last but not least,
This one sounds like even I can understand it.
this is the diversified one. So they've got hedge funds
Okay.
that are dabbling in everything, a little bit of stocks, a little bit of bonds, commodities, you name it.
So they're hedging their bets.
They're spreading the love.
Very diplomatic of them.
Classic diversification strategy
Right.
designed to, smooth out the returns.
And reduce the risk.
Exactly.
And it's working.
Seems to be 9% increase in AUM for multi-asset investing, reaching $83.1 billion.
Okay, so Blackstone's firing on all cylinders,
They're doing well.
investing in everything.
That's right.
But what about the future?
The million-dollar question.
The trillion-dollar question, really.
That's right. So they were cautiously optimistic during the earnings call.
Cautiously optimistic. Isn't that Wall Street code for...
We have no idea what's going to happen.
Yeah, exactly.
But we're hoping for the best.
Okay, so classic cautious optimism of a multi-billion-dollar investment firm.
Pretty much, yeah.
But you know what they say? Hope for the best.
Prepare for the worst.
Exactly.
Yeah, so, they see uncertainty in the market, obviously.
Who doesn't?
Everyone does, but they feel like they're well-positioned to, to weather the storm.
Well, they do have $1.1 trillion in assets to play with, so...
It's a pretty good umbrella.
That's a good way to put it.
Yeah.
But nobody has a crystal ball.
Nobody knows the future, Riley.
That's true, except maybe those AI oracles you were talking about. Maybe Blackstone's got a secret weapon.
Maybe.
So, should we all just follow Blackstone's lead?
Blindly.
Yeah, and just invest in whatever they're investing in?
That's one strategy.
Because that $54 billion investing spree, it sounded kind of fun.
It's tempting.
It's very tempting.
But blindly following anyone's investment strategy is probably not the best idea.
Okay, that's fair.
You got to do your own research.
Your own due diligence.
Exactly.
Speak to a financial advisor.
All the boring stuff.
All that boring stuff. But let's be real, most of our listeners,
Yeah.
they're not billionaires.
Not yet.
Not yet. With access to Blackstone's exclusive funds.
Right.
So what's the takeaway for the average investor like myself, just trying to, not lose all their money in this crazy market?
That's a great question. I think there are a few key insights we can take away from Blackstone's performance.
Okay, I'm listening.
Even if we can't exactly replicate what they're doing.
Okay.
First of all, diversification.
The old don't put all your eggs in one basket adage.
That's right. Your grandma was right.
Yeah.
Blackstone has their fingers in a lot of pies.
A lot of pies.
And it allows them to, weather those ups and downs.
Okay, so instead of betting the farm on the latest meme stock, maybe consider a more balanced approach.
Exactly. A little bit of this, a little bit of that.
Okay, who knew?
And they're also playing the long game.
Okay.
They're thinking about, not just the next quarter, but the next year, the next 5 years, 10 years.
Patience, young grasshopper.
That's right. Patience is key.
Got it. But what about those robust fees that Blackstone charges?
The fees are definitely something to keep in mind.
Are those something that, the average investor should be worried about?
Well, fees are always something to be mindful of.
Okay.
Right? Whether you're investing with Blackstone or anyone else.
Right.
High fees can really eat into your returns over time.
Yeah.
So you got to understand what you're paying for.
Shop around.
That's right. Get the best deal.
Read the fine print.
Always read the fine print.
Always good advice.
Yeah.
But you know what else is good advice? Investing in vintage flip phones.
Flip phones.
Yeah.
Really?
Think about it. They're due for a comeback in a world of, touchscreens and AI and everything.
Yeah.
There's something kind of beautifully simple
Right.
about a flip phone.
I can see the appeal,
The
the nostalgia factor.
nostalgia, exactly.
But I don't know if Blackstone's out there buying up old Nokia phones.
Okay, well, maybe not yet. But speaking of Blackstone
Yeah.
and their love of
Robust fees.
robust fees,
You said it, not me.
how much did they rake in this quarter?
Some of those management fees alone.
Yeah.
$1.79 billion.
Billion,
That's
yeah.
an 8% increase year over year.
See?
I know you love those fees.
I do. But hey, they're providing a valuable service, right? Managing $1 trillion empire,
It's not easy.
it's not for the faint of heart.
It's a tough job, but someone's got to do it.
Exactly. And that someone is Blackstone, but
But it highlights a key difference between Blackstone and the rest of us.
yeah, I was going to say, they're playing a different game.
Different game, different rules.
Yeah, like they're playing financial chess,
Okay.
and the rest of us are, I don't know, playing checkers.
Yeah, something like
Yeah.
that.
But we could still learn from their moves, right?
Absolutely. I think there are takeaways here.
Okay, hit me.
So, first of all, that strategic focus on, logistics, life sciences, renewable energy,
Right.
it reflects a broader shift that we're seeing.
Less hype, more
Hard assets.
hard assets, exactly.
Like real stuff.
And second, the willingness to spend money.
Yeah, deploy that capital.
$54 billion in a quarter.
During a time when everyone's, a little nervous,
Yeah.
that takes confidence.
They're like that friend we all have that, like, somehow always finds the best deals.
That's right. They've always got their ear to the ground.
They're always right.
Seems like it.
Yeah, and lastly, their performance.
They've been doing this for a while.
Yeah, it's not a fluke.
Not a flash in the pan. So there's something to be said for that long-term approach.
Patience, discipline, all that good stuff.
It's not always the most exciting, but it gets results.
Okay, so the takeaway for our listeners.
Yeah.
Diversify your portfolio.
Number 1.
Think long-term.
Number 2.
And, maybe hire a team of financial wizards.
If you can find them.
To manage your money.
Yeah, good luck with that.
Or just listen to our podcast every week.
There you go. Much easier.
And pretend that we're your financial wizards.
I don't know if I'd go that far.
On that note, it's time for,
You know what time it is?
our completely absurd, not at all financial advice.
Don't forget the not financial advice part.
Stock tip of the day.
Let's hear it.
This week's pick is carrier pigeons.
Carrier pigeons, wow.
Invest.
Okay.
Think about it. In
Right.
a world of, technology and everything's digital.
Right.
Carrier pigeons offer a low-tech, high-security, and frankly, adorable
I'll give you that.
alternative to email.
All right, that's a tough sell, but I respect it.
If you want to stick with your boring index funds,
I think I will.
that's fine.
I'm boring, that's fine.
More carrier pigeons for me. And remember, listeners,
Yeah.
you heard it here first.
So don't blame us.
Don't blame us if your portfolio takes flight.
That's right. This is not financial advice.
That's all the time we have for today, folks.
Thanks for joining us.
Thanks for joining us for another wild ride through the world of earnings reports.
See you next time.
Until next time, stay savvy, stay skeptical, and always, always double-check your stock tips
Especially the carrier pigeons.
with a qualified professional.
Yeah.
See you next time on TalkTickers.